We're going to jump right into, I'm still going to call it Google. I know it's Alphabet now, but I'm still
I
going to
thought we
call
were going to start with Zimmer.
Oh, you're, oh, well, shoot. Okay.
We can start with Google.
Well, it's up there. Yeah, let's start with Google.
Let's do it then.
We're gonna throw you all off here. We're gonna start with Google. It's just showing on my screen here. So we know about Google, Alphabet, internet company, only 0.4% short on the float side. Institutional ownership, 62%. That means a lot of people hold that individually. These numbers have come down quite a bit to where they're not good for investing yet, but looking better. PE ratio 18.6, below the industry at 22.2. Price to sales 5.7 versus 6.2. Price to cash flow is 15.4 versus 16.6. And price to book value, well, that's 5.8 versus 5.4. And they have a PEG ratio, very good PEG ratio, which shows what you're paying for the future growth, 1 versus 6. So I like seeing that. So in valuation ratios, you always want them lower than the industry average. We do see earnings looking pretty good, up 37.4%, which is actually very good, but the industry was up 44.5%. Sales did climb by 13.1%. Industry was up 4.8%, so that's a positive. The 5-year earnings per share growth estimate from the analysts, they're looking for 18.2% versus 15.9%. So Google, and again, still apologize for not calling Alphabet, still looking pretty good. They pay a small dividend, 0.5%. Just stop that. I mean, they use 8% of their earnings to pay that out. I don't see the point of that. Current ratio 1.8 versus 2.3. That's good. Debt to equity, very good. 0.1. Industry at 0.2. I got to be excited about their net profit margin. Yeah, very high, 30.9, almost 31%, above the industry at 20.8. Return on equity, very good, 32.2 versus 31.6. What do you got for the numbers going forward, Chase?
There's a current price here for Alphabet. Then ticker symbol is either GOOG or GOOGL, depending on which one you want. There's two different depending on the voting class there. I forget which one is which. One you get voting rights, one you don't get voting rights. I never understand if they're equal, why you would not take the one with the voting rights, but I digress. Current price there for GOOG is $165.81. The 52-week range here is $142.66 as the low. The high is $208.70. Year-to-date, the stock is still down about 13%, so we have seen a little bit of a pullback there. And we've talked about how these Magnificent Seven companies have gotten so expensive. Alphabet is one that it's not quite a buy yet, but it is actually in our hold category based off of the estimated earnings for December 2026 of $10.19, as it would give us a target sell price of $169.15. So again, not quite at that buy level for us, but for a great company to kind of be pulling back, I mean, it's of intrigue here if it does pull back further.
And I am surprised too, looking back 90 days, the estimate for 2026 was 1025. It's only down to 1019. And all the stuff this company's gone through to still remain there is surprising to me. I mean, that they do have lawsuits coming up from the government, so there's a lot of headwinds for a lot of these Mag 7 companies. It's just surprising to me, and I don't know if it's going to change very quickly with the analysts, but I'm still, I like the company. I want to get it, but then in the back of my mind, I think like, who knows? They could break up the company. And I forget some of the details of the lawsuit that they're at. Gonna drag on.
It's not even one lawsuit. They've been ruled a monopoly in search, and then recently here they were also ruled a monopoly for publisher ad servers and the market for ad exchanges as well.
I did not see that.
So they've been ruled a monopoly by two different judges that they're going to have to work through. And one thing I look at with Alphabet, though, maybe breaking up the company wouldn't be that bad. And I say that because YouTube is a great asset that they own. Some say that it is kind of undervalued. If you were to separate that out, it might get a higher margin. If you look at like Netflix multiples, that might be positive for them. They have Waymo, which continues to lose money, but I think it has a huge growth opportunity there as well. I mean, you kind of get a sum of the parts equation, as some analysts call it, and Alphabet might be worth more independently than they are kind of as a whole right now. So it's an interesting story to follow here. But the big thing I question is search. That's their big asset. I don't know. I used to be kind of a knocker of ChatGPT. I use it a lot more than I actually use Google search now.
Yeah, that's because you're a young guy. I keep forgetting to do it. I just constantly go to Google all the time.
It's right there. It's easy.
But I do want to point out before we run out of time that could be why the stock is staying high, because the breakup value could be worth more. And YouTube, I would love to see their profits, because everybody knows YouTube.
They've done tremendously well. And I know we talk about this, I still think Waymo is going to be a big player here in years to come.
Why Waymo? All right.